what I see a lot of investors do is the first 90% of the project, they do a great job. And then that last 10% of every house really struggles. And that was me for a long time, like down to your electrical outlets being crooked, your tiles not grouted. I think when homeowners walk in, they're paying attention to those little details to make sure whoever did it didn't cheap out. So we've got 100 and gosh, how big is it? 120 point checklist that every house goes through when it's finished.
Hello and welcome back to the Growth Circle podcast. This is Lincoln Amstutz, and today I've got my good friend and fellow investor Luke Odell on the podcast with me, and just want to bring him on. Before I do, a little bit about Luke. He is a 23-year-old real estate investor and construction company owner based out of Springfield, Missouri. He's grown his company, High Point Real Estate, into owning millions in real estate, as well as doing dozens of projects on flips each year, all within just a few years of starting the business. Luke is a personal friend and one of the hardest and smartest workers I know. So without further ado, Luke, welcome to the podcast, bro. I've seen you go from knowing nothing about real estate, not doing anything at all, to doing a wholesale deal every month or two, and now into buying large packages of houses and doing in-house construction on those and doing flips and keeping them as rentals. Can you take us back to like the start of your real estate journey and what that looked like and what got you going in at like such a young age?
Just from the very beginning.
Yeah, from the start.
So it would have been 2020. I was still in school. I guess it would have been a freshman in college. COVID lockdown happened. I was stuck at home. Tried drop shipping at first, actually, before I got into real estate. Lost all my money in like 2 weeks. And so I just started doing a bunch of research on like ways to make money, ways to build wealth. I knew I always wanted to be an entrepreneur, and kind of landed on real estate there. I was sick of school. I was sick of the situation I was in. So about April of 2022 or 2020, I called my dad, asked him about if he knew anything about wholesaling, and he was like, "Well, actually, Lincoln does that." So met up with you, talked to you about it, lots of podcasts, lots of YouTube, and then started driving for dollars every day from about April to I'd wake up in the morning, cold call, go to work 10 to 3, drive for dollars every day after. And I did that from April till September 1st when I got my first wholesale deal.
Very nice. And that was the start.
Yeah.
Yeah. So, I mean, I'm just kind of curious, like off the bat, was there ever any fear of like getting into real estate at a younger age, like without having a bunch of capital and not really knowing, that just like being younger, did that ever like concern you or like not as much?
Yeah, I'm a big time at first. Like you said, I mean, you knew me from the start. I didn't know a whole lot about it. And so it was a big concern. And even after I put my first deal under contract September 1st, I was living in the fraternity house at the time and drove back after getting under contract and threw up because I was like, what am I doing? Like,
yeah, it's big. It's like getting a full on house under contract. You're on the hook to buy it now. You're like, I think it's a good deal, but we'll see.
Yeah. So there was a lot of concern. I mean, even like multiple deals. So even after that first one, like that second one, like there's still that doubt in your mind of like, am I too young to do this? Is this real? Like, I would have took a lot of deals to get really comfortable with it.
Yeah. I know you mentioned it just briefly there. What were some of the resources you used early on to learn about real estate and just training yourself for understanding wholesaling and all of those things?
A lot of podcasts like this one, and other ones. Max Maxwell was a big part of it. A lot of YouTube videos, a lot of resources like guys like you. You helped me get into it a lot. Wes Litton was on this podcast. He was a big resource. Really just leaning into that. And then also the key component was just doing it. Like I drove for dollars and called for 4 months, and I'm sure I sucked at it at first, but the continuation to do it was probably that biggest part.
Right. For you, does it come pretty naturally to be disciplined in the sense of you know what you need to do to get a deal, right? You got to, yeah, you're driving for dollars, you're calling, you're doing property analysis, making offers. Uh, like, does the discipline of just doing that every day come fairly naturally? Because I know a lot of people need that structure of a job, somebody telling them what to do. This is like your own business, all on your own. Is that more trained and like practiced, or does that kind of come naturally to you?
Um, I think it's both. So I don't think it comes super naturally to me. At the start, I was just at a place where I didn't like where I was, and so that discipline was forced so I could get out of that situation of just not liking school, not liking where I was working. Um, and then after that first deal, I saw it worked, and then I just continued to force myself because obviously it worked. So I'd say more. It's a struggle for sure, but you just got to make yourself do it.
Hmm. So you were in college at the fraternity house. You just didn't, yeah, you just weren't interested in school. Seemingly, like this sounded a lot more appealing. When did you make that full jump out of college into real estate?
So after that first deal, I was still enrolled that semester. So I did it September 1st was the first contract of 2020. And I was still enrolled in college, but I didn't go to a single class all semester. I don't think my parents know that to this day. They think I was still enrolled. But that's when I took the first jump, the full jump, and then was still doing a little part-time work here and there. I worked for my dad. He needed me. He's got a tool shop, so he needed me there some. So I'd still work a little bit there, and then kind of the same thing. So I closed that first deal October 1st, and then drive for dollars and cold calling almost every day. Bought one list. Other than that, it was just drive for dollars and self cold calling. And I think mid December of that year, you and I actually, I found one and we partnered on my second deal. And then when we got that and sold it the next day, that's when I just went full force. Told my parents I was dropping out, quit my job. So it's double whammy because I worked for my dad too and was dropping out of school. But that's when I went full force into it.
Nice. I mean, I'm sure there's going to be like a younger audience, some in a younger audience watching this that are considering that, or maybe it's just somebody that's in a job that's considering quitting it to do real estate. Like when do you think it's appropriate for somebody to make that switch from either their current job into this or from school into real estate? Do you think it's just quit immediately, just go for it? Do you think there's a some sort of balance and transition while you're starting to do some deals? I mean, when do you think that makes sense for a lot of people?
Yeah, I think there's a balance. I think that's a loaded question too on like life circumstances. Like if I had a wife and two kids, I probably wouldn't have quit at that point. But it was just me. I had cheap rent, living with just a bunch of dudes. Like it was like $400 a month. Really nothing to lose. Um, and so if you're in that situation, you can piece together a deal or two. I think it's appropriate to quit and try yourself. So I put a goal on myself. Like if I don't make X amount of dollars this first year doing it, I'll go back to school. Um, and then I would think like if you wife, kids, all that, I would at least replace your income or get to a consistent deal flow before you quit your job, I'd hope.
I think that's smart. I think that's smart. And because there's going to be risk regardless, you're going to have to at some point make that transition. And there's not that certainty of income that you get from a job, or, there's that safety net of being in college. And that just like looks to be the appropriate thing for a lot of people. But so there's always risk. But at the same time, like you're saying, it depends on your situation. So I think that's a smart approach for people to look at.
Yeah, for sure.
After, so you got started in wholesaling, and can you tell us like how long did you do that? Like what was the progression there? Was it like a deal a month? And like how long did you wholesale until starting to actually buy property and flip?
Yeah, yeah. So that second deal was in December. Third deal was in February. And then in March, I found a package of it was 6 or 7 units. I believe it was six. No, it was seven. It was 7 units. A triplex and four houses, and got them under contract for 325,000. I mean, they were worth well over 500,000, but they all had tenants in there. I couldn't wholesale them. Like you couldn't get people in and out. Um, So I actually ended up used some private money and then refinancing, getting no money down loans on all of them. So that started my rental portfolio.
Mm.
And then did that and then continued to wholesale. After that, I didn't add any more rentals for a while, continued to wholesale till about June or July of 2021, and bought my first flip off you.
Yeah, that's right. What was that street that it was on?
Ridgewood.
Yeah,
Yeah,
it was a
Ridgewood.
good
Bought my
deal.
first flip off you.
Sold it too cheap.
You did. I appreciate it. We made a bunch of money on it.
Yeah.
Um, so started flipping there, and then really was doing about one every couple, like one at a time for the rest of 2021. Learned some lessons. First flip made really good money. Second flip lost like 20 grand. Um, and then after that, we evened out, made money again. But really, there it was just one flip at a time, and then probably about that March area, I was doing at least one a month, usually about two, sometimes three for the rest of 2021.
Mm-hmm. Very nice. Very nice. I want to go back to that deal where you got 7 units in one transaction. You said you bought it for about 325,000. What, and then you kept most of those as rentals or all of those? What was the, uh, and like how, like, do you still own those properties? Did you end up flipping them? Can you kind of tell us the end results of that? Because it seems like a solid deal for that purchase price.
Yeah, it was. So we closed on them all through private money. Um, Sold one of them through you. Actually, you found me a buyer for that first one, um, and then kept the rest of them for another year or so, and then slowly started to piece them off. So I own two of them left, some really good ones. Sold the triplex to my now project manager. Actually, wholesaled it off me and made a bunch of money. And then the rest of the houses just slowly pieced them off.
Nice. Nice. So would you say, like, I know you said they're probably worth 500,000 at that time. You think either between the houses you hold and the equity you have, as well as the ones that you've ended up selling, you've probably got a couple 100,000 margin on that single deal?
Yeah, yeah, I'd say so.
Yeah, that's pretty cool. Do you have you bought other packages of properties since? Is that something you look for, or is it mostly one at a time?
Yeah, I mean, we'll buy them. I think I bought one in the summer, and I bought um, another 7 units actually for 315,000, and they were worth well over 500,000 as well. So those are some money deals. They don't come as often. I'm under contract on five, a package of five right now. Not quite that spread. There's still spread on it, but we'll buy them as they come. They're just harder to piece together. They come fewer and far between.
Well, let's yeah, keep going on your kind of story of where you transitioned into doing flips. You're still doing some wholesales, and kind of, yeah, what came next. And I, yeah, definitely want to get to when you brought on in-house construction. I know, and what led to that decision. So kind of bring us up to that speed.
So we're in 2021. So we're doing about one at a time. 2021, still wholesaling. In tail end of 2021, beginning of 2022, start bring on a second crew. So we're doing two, three at a time, flipping. We did quite a few bursts too, buying and holding. Still wholesaling as well. So that was all of 2022. Just running 2 to 3 crews, 2 to 3 flips or buy and holds at a time, and still wholesaling about three a month, four a month. On top of that, all the way through 22. It's 24, yeah, all the way through 22, and then kept that flowing through 23 till about June. And in June, I was wanting to really scale our flip operation. But the cost, the timelines, like that's to me not scalable if it's not in house. Because you're relying on so many other companies, businesses to fit your timeline when they don't only work for you. Um, so Chris, he's now with us. He was my main general contractor. He did a phenomenal job through the whole time. But of course, he wasn't just working with us. he was working in the business, having trouble keeping guys. He was stressed. I was stressed because I was wanting deals to be done quicker. So I just approached him and was like, "Hey, what if you and your guys all just come on board to my team? I'll help you. You guys work for me, but you get kind of the keys to the castle. You run that side of things. You can grow it. I've got the funds to grow the business." So we brought him and all his guys on the 1st of September, and now we run a full in-house construction team. So we've got a project manager. We're doing the hiring process for our fourth and fifth crew right now. That takes a long time to get the crews stabilized, like find the right guys, the right fit, the right chemistry, the right skill sets, all in one crew.
Man, that's huge. I definitely want to dive into a lot of that with setting up the crews and bringing that all in house. I mean, that's a crazy transition because you're going from, all right, about 4 years ago, little under that. Is it 3.5 years or so you've been in it?
Yeah, September will be my fourth
Yeah,
year
yeah.
this year,
So
so 3.5.
3.5 years early on, you're doing some wholesales. You're starting to make some good money. Starting to do multiple at a time, and then you're like, okay, let's actually do these full renovations ourselves. So you're hiring that out, doing the flips, and then it just gets to the point where you're doing multiple wholesale deals a month, multiple flips within a few months, and it just makes sense to bring that in house. I mean, just the scale of that is quite large. I mean, you had to have delegated that somewhat. Did you have team members on the wholesale side? Obviously, you were hiring out the work on the construction side, but how did you manage your time and how did you split that up with delegating?
Yeah, we delegated a lot. So I've got currently two kind of they're hybrid ISA slash acquisitions managers in the office. They're both about 30 hours a week. So they'll run appointments for us, take photos, they can comp houses, do all that. And honestly, my studs of the team are the VAs I've got. I've got a killer lead manager, which is really the engine behind the wholesale machine. A killer assistant, who's a VA who like pulls all of our lists, make sure everything's running, make sure all the programs we're using are functioning correctly, and then an awesome cold caller. So on the wholesale side, that team right there, and then now on the construction side, Chris, our project manager's killer. He's been doing it a long time. He knows anything you know about construction. He's great at timelines, great at budgets. So he's a big piece of that. And our operations manager, Austin, he just his job lines just build systems, make sure things run. So
Right.
a lot of delegation.
Love it. So take us into like the overarching view now of High Point Real Estate, like amount of just employees overall, wholesale side and acquisitions, your construction team. I mean, what does the operation look like? And what kind of volume are you doing wholesale and flips, rentals at this point?
Yeah, so we're just over 20 employees. I think we're at 22. On the wholesale side, we've got, like I said, 3 VAs, 2 ISAs. I consider myself, because I still run a lot of the acquisition appointments. Unfortunately, we're going to be looking to hire that out here this month, actually, posting an ad next week. So that, and then the rest of it's all construction. So on that side, we've got our operations manager, Austin, Chris, our project manager, and then the rest field guys. Full-time tile guy, because we tile every house. So he's just house to house, and the rest is crews.
Very nice. Very nice.
So we're doing 5 flips right now. We've got 5 on, actually got 7 on deck that we've bought. And we've got 9 other houses under contract right now. So we're going to, I don't wholesale as much. I'm going to buy and sell quite a few of those, but I like to close on them and then sell them. It just makes life easier. But we're doing on average still about 3 to 4 of those a month.
That's huge.
So that's where we're at. Yeah.
No, I think it's awesome. And having, I'm on the wholesale side myself and do some flips and keep some as rentals. So that's to me such a huge advantage of seeing, getting first off like a real pulse on the market of knowing what are homeowners looking for, what are buyers willing to pay, and then you get the best deals because instead of tacking on 15,000 wholesale fee and somebody else buying it, you got that extra margin in your deal, or you can just take down more deals yourself that you wouldn't have room to wholesale. So it gives you a great opportunity if you're doing the marketing yourself and that's the way you've entered in. Uh, for you, I mean, do you see yourself always kind of pairing those two together, like staying in the wholesale business, gathering your own leads and your own deals? Or do you just really like the construction? Would you ever see yourself going full time into flipping and kind of let go of the acquisitions?
Yeah, I think we'll always do that. Couple the flips with the wholesale. To me, it's the only way to scale it. You're controlling your deal flow. You're getting way bigger spreads. So I think we'll always couple them. And to touch on what you said, for people getting into it, I think wholesaling is such a good way because we've done. I mean, both of us done well over 100 transactions. It's such a good way to learn. You know what super skilled investors are buying, why they're buying them. Well, if you get one they won't buy, why they won't buy it. Um, so I think it's such a good way to learn. But yeah, we'll always couple that together. We're getting into some new builds. So we're building one, in the process of buying a lot to build another. So obviously, we'll even add buying lots to that acquisitions team.
Very nice. For you on the financing side, I mean, you've got 5 projects, you've got 7 more in the pipeline that you own ready to go, and I'm sure a couple other stragglers that are there that you're working on for wholesale and whatnot. I mean, what does the financing side look like for having the capital to buy that many properties, the capital to maintain payments on those, in the process? What does it look like for you on the funding?
Yeah, so a lot of different things. At the start, a lot of super expensive hard private money, hard money. Um, Now through the rental portfolio, we've got a couple great lines of credit that we'll use to fund. We'll still use some hard money on the side, some of my own cash sometimes as well. And I failed to mention this earlier. I've I've got a partner now on the construction side. So we're signing paperwork here March 29th. If this airs before that, you're going to get me in trouble. Not really. We're signing paperwork March 29th, and they're bringing some capital to the table as well. So that's to help us just really scale that.
Very nice. I like that. For you, what systems have you created to stabilize your team? Because at this point, over 20 employees, a lot of moving parts. How much emphasis do you place on systems? What is that like?
A lot, a lot. And for the longest time, I was the worst at them. I mean, really, up until early 2023, I basically had none. I was just running around working 60, 70 hours a week, wholesaling houses, selling houses, looking at projects. But now, I mean, everything, I call it checks and balances. Everything has checks and balances in our company. And that's Austin's job, is to build systems and make sure people are following them. So, for example, on the acquisition side, everyone has metrics they have to hit every week that are trackable. So, like how many calls are they making? How many appointments have they set? A big metric we track that has actually brought us a lot more deals is the percentage of offers we're making on appointments we went on. 'Cause about 4 months ago, I found we were offering on about 54% of the appointments we went on.
Hmm.
So just dialing in those numbers and tracking all that.
Yes.
On the construction side, we've got dashboard. The construction side actually is the systems I think are killer there compared to the acquisitions. So we've got every job has 6 phases, and at the end of every phase, our project manager walks it and essentially blue tapes the house for that phase. Um, so that's speeding up timelines. That's at the very end of the job. We're not blue taping for 6 days, 7 days. We've got dashboards for if people need materials, it's on the dashboard. a VA or Chris actually orders it super quick. Once the orders and it goes down, like once we place an order, it goes somewhere, and then once someone receives the order, they click receive. Then once all the materials are checked in,
Hmm.
they check them in. So it's hard to break down all of our systems. There's a lot to it,
Yes.
but yeah, a lot of systems.
That's huge. I mean, it makes it a business from just a self-employed guy running around, like you said, wearing all the hats, doing everything. Now you can efficiently delegate, efficiently run a company because people actually know what they're supposed to do and what measurements to hit and quality control on your flips and such. So it absolutely makes or breaks, if it's a real company versus just a bunch of guys going out there and doing work.
Yeah,
If you left that situation, it all falls apart. So now it's like it can go without you, and you're constantly improving that, of course. But I think that's huge for anybody starting a company, especially you're just 3-4 years into this. To get it earlier on will make it to where in 5, 10, 15 years, hopefully, it's either you're completely out of it or you're at a very high level position where you're just answering to a few guys, talking to a few guys that are running it from there. And it seems like you have that foresight.
for sure. Yeah, to kind of recap the little ramble I just went on, I think everything in these companies, like if you want to get to that level, like everything that's done in the company has to have a trackable metric. And for us, we create dashboards on Salesforce and even Trello sometimes where those metrics go. Is so important.
For your flip projects, do you have like a certain timeline that you're trying to finish a project in, maybe based off of the rehab amount? Do you have a certain profit margin or profit amount that you're trying to hit per project? Any metrics like that you try and hit?
Yeah, yeah. So our goal is a 5 to 7 week project, depending on like the scale of the rehab. We're doing one right now that's literally going to take us a week and a half with floored and painted. But on average, 5 to 7 weeks. And what we're doing to cut down that rehab time is we're staggering houses. So we've got rough in crews, or we're getting rough in crews, and then finishing crews. So while a finishing crew is finishing up a house, doing all the cosmetic stuff, a roughing crew is staggered in there, already working on their next house for 2-3 weeks. Um, so essentially, it cuts down the actual time to about 3 to 5 weeks.
Right, right. How, I mean, for you on all of this, how did you learn the construction side? I mean, was it really just doing some flip projects, hiring it out, kind of watching the process? Have you learned a lot from having Chris in there and you brainstorm with him? I mean, to go through and to have checklists for everything that needs to get done, quality control, knowing how nice to make a house versus, just kind of the bare minimum. Like, where did you learn all this and what's that been like?
Yeah, I mean, a lot of trial and error. A lot of it defers to Chris. Like, if someone asks me a construction question I don't know, I just say call Chris. He knows. He knows the answer. So the right people in the right seats. And then yeah, a lot of trial and error on flips. Just listing something. I got a great agent. He's phenomenal. So we take his listing feedback, apply it to our next houses. Um, And at the end of every project, me, Chris, and our operations manager are sitting down now and like, what happened here? What went wrong? How can we prevent this on the next project? Because we have done some projects that weren't great, that took too long, that went over budget, that we did too nice or not nice enough. So I think just constantly learning and sitting down at the end of each project and trying to figure that out.
Right. Will you ever do projects for other people on their renovations and then just take a GC fee? Or is that something in the future that you'd like to do and growing the construction company to that?
Yeah, I think we would in the future. Um, I think we're a bit of ways from that. But I think in the future we'll look at doing something like that for sure. It's hard to say for sure though.
I mean, I'm sure you probably make a lot more if you're doing your own flips because you get 100% of that profit on the flip itself rather than just the construction fee. Of course, more risk, but more reward on that. But if you can supply the deals, which it sounds like you can, you get the funding for it. I think that just makes sense. So,
Yeah, I think keeping crews busy is so important. And I'm not big into buying deals that I don't want to buy a bad deal to keep a crew busy.
Hmm.
We won't do it. And so I think when we get spots where we don't have something for guys for 4 or 5 weeks or a couple weeks, I think we'll sub out to just close friends and family and other investors we know really well.
Right.
But I don't anticipate us becoming a massive general contracting company for other people.
What are some pointers you could give to people that are wanting to improve their flip projects, houses that they're listing on the market, something that helps the property stand out or that is going to just make somebody more money when they're doing a flip versus, just missing out on those little opportunities?
Yeah, I think what I see a lot of investors do is the first 90% of the project, they do a great job. And then that last 10% of every house really struggles. And that was me for a long time, like down to your electrical outlets being crooked, your tiles not grouted clean. I think when homeowners walk in, they're paying attention to those little details to make sure whoever did it didn't cheap out. Um, your, so we've got 100 and gosh, how big is it? 120 point checklist that every house goes through when it's finished. And it has to be signed off by the job lead. So each crew has a job lead and then Chris. And then I used to sign it off myself, but Chris got it covered. So doing stuff like that, making sure faucets aren't leaky, trims caulk, just the little things I think is actually what matters to the homeowner the most.
I've definitely noticed that as well because when I first started doing projects myself, it was in the middle of the COVID crazy time where the market was great, prices were going up, inventory was low, and you could really get by with doing pretty minimal rehabs, or maybe the quality isn't 100% there. Maybe it is that 90%, but because there's so few houses for people to buy, that's just what they got. So, you could get by with those kind of rehabs versus now it does seem like the market's settling down a little bit over the last couple years. People are returning to normal standards of they want it to be nice. If it's quote unquote renovated, like we put on the ad, it needs to look renovated fully. So I've also noticed that myself of that last 10% is huge and people are starting to notice it and can ask for those fine tuning repairs at the end of one.
Yeah, and they will. They will. Especially right now. We're getting we just got hammered with one of the craziest inspection lists I've ever seen, and we did a phenomenal job on the house too. So people are asking for that stuff. And a big strategy of mine too is, we don't. They're not the worst neighborhoods. We don't buy in the very best neighborhoods a lot of the time because that's where the deal flow is. So we do the houses really nice. They're getting granite, they're getting tile backsplashes, tile showers, tile bathroom floors, luxury vinyl plank, no carpet. All that good stuff. And then we're listing it at the same price point that a house with Formica countertops and carpet is getting listed at. And what we're seeing on some of it is we're getting bid up to the appropriate cost, but houses are never sitting, which for us in a volume game is so important. Um, so I would say for people too, run your numbers conservative and then do your rehab a little nicer.
And that's gonna, like you said, keep the deal flow because you live or die by that deal flow. Because for you, you've got to keep those turning. If you've got properties sitting for a month, 2 months, or longer, your capital's tied up there, and it doesn't allow you to keep growing and keep that moving forward. So finding those advantages, like you're saying, to conservative on sale price, but over the top and nice, especially in these kind of areas, like you mentioned for the rehab, that's going to set it off and keep it moving. So I think that's it. That's a good strategy there. What does your hiring process look like? You've hired a lot of people at this point. Like, what do you do when you're looking for somebody? How do what kind of questions are you asking? And can you kind of go into that for us?
So on the construction side, that's most of the hiring we've done. And actually, Chris does all of that. I've yet to hire, other than Chris, I've yet to hire anyone. He's done it all. Um, but really, it boils down to start it out the application process. We ask a bunch of super obscure questions on our applications. I'm a multiple of them. They're not like weird. They're just obscure. They're hard to answer. They have to be well thought out to answer. So that vets out a bunch of people who aren't super interested in the job or are lazy or not detail oriented. So that's that first step. If they answer that wrong or don't fill out that part of the application, they're just thrown out. Um, and then obviously that next step, the in-person interview, Chris interviews them. And culture is a big thing for us. So then what we do is we actually throw them on the job with one of our job leads for a week, see if they fit the cult. They get a week trial run. This is on the construction side. It's a little different hiring than anything else, in my opinion. They get a week trial run, and we watch over everything they do. At the end of the week, the job lead with what crew they're going to be on basically fills out a form saying how they did on work, how they did on culture, how they fit in with the crew, and that's what determines it.
I like that. I like that because if somebody's a good fit, naturally they're going to enjoy being there more themselves, which turns into better work quality and motivation, as well as your current crew that's already there. I could imagine, especially hiring for a position like that, where you're moving from house to house, you're just with a couple, two, three, four guys always. Like that's got to be such a big, big deal. So it makes sense why that's part of your metrics that you're checking, after a week to see if that actually works. Because on paper, it's a lot different than in reality.
Yeah, and it's similar to the acquisition side. Almost any other position, we start out. I do a lot of word of mouth hiring, honestly. I hire out of my fraternity network and just other people. So I always start out by sending them kind of a quote unquote application with some basic questions, um, some super obscure questions, just to see how they do on those. Then we do an in person or Zoom interview. Um, and then I actually have them take a personality test to see if they fit their role. And then I've got a business coach, and a lot of times I'll actually run through the personality test with them. We'll just bounce it back and forth, kind of give input on that and see if they're a fit for that role. And then culture, if we think they fit our culture, and it's a lot based on that.
Nice. Are there any big lessons you've learned from hiring?
Yeah. If there's red flags up front, they're just gonna blow up on you. I mean, most of the time. Don't ignore those. And then not necessarily hiring, but employment in general. Don't hang on to people too long if it's not working out, because it doesn't work out for you, and in the end, they're probably not super happy either, and it doesn't work out for them.
Yeah, I think that's a good piece right there. For you, when it comes to goals, are you planned out like 5, 10 years down the line of what you think you're going to see? Are you more a year at a time? How do you handle goals?
Yeah. I'm softly planned out 5 or 10 years. My 5 year goal 5 years ago was to be playing college soccer. So they never really work out. But I am softly planned out. So we have our quarterly rocks. We're super planned out by quarter. Every quarter we go over it, why we hit our goals or why we didn't. Super goal oriented for this next year. Um, and I got a 5 year plan. I guess I don't quite have a 10 year. Um, Happy to break those down if you want.
So what are some of those primary objectives for quarter by quarter, year by year?
Yeah. Quarter by quarter, it's just a house number. I think we're wanting to do 13 or 14 flips this quarter. We want to be doing no minute, like the least amount of wholesale deals we want to do in a month is 4. And we're wanting to, this is Q2 now, Q2 of this year, we're wanting to wrap up our new build that we're doing. Through the end of the year, we're wanting to do 5 or 6 more new builds. That's a market we're really wanting to get into. With capital, it's so scalable. And then and continue. We want to buy and flip over 50 houses. Want to do over 50 to 70 wholesales. And then the 5 year, man, we want to be in a bunch of different markets, mostly building, honestly. We want to go up to Kansas City, Northwest Arkansas is booming, and then potentially look at a market in Florida or Texas, but that's to be determined. But we sure want to be in Kansas City, Northwest Arkansas building, possibly wholesaling and flipping.
Very nice. Why new builds? What's the draw there that you're finding over some of these renovation projects?
The scalability to me. I mean, it takes a lot more capital, so that's going to be the hold back there. Going to look into raising funds for that. But every flip's different. I mean, over the 50 something flips we'll do this year, not a single one of them will be the same. So it's so hard to automate and build processes. And we have some pretty robust processes at this point, and we still get thrown for loops on every house. Whereas new builds, once you get that permit and you get the groundwork and the foundation poured, as long as you can get subs to show up, there's really no hiccups. Everything's brand new.
Hmm, makes sense.
So I think the scalability of it, the processes, and like I don't think we quite have to be there for the new builds. Like I visited the one we're doing out in Ozark once.
And as far as I know, we're still at a fairly large deficit for new construction in America in general. I know certainly in Southwest Missouri, where we're at, with the amount of people moving in and the amount of, well, the amount that construction got delayed because of COVID, there's just a lack of inventory for new builds and for what the demand is, at least. Are you seeing that? Is that part of this decision making too?
Yeah, yeah, big time. That's a big part of the decision making. I mean, millions and millions and millions of new build units behind nationwide. Um, so that's a big piece to it.
When do you think it makes sense to go into a new market and why? Would you stay in Springfield if it, continued to have the demand for the supply that you're providing, or do you just like the diversification of different markets as a strategy for growth?
Yeah, we'll definitely always be in Springfield. We'll keep building here. We'll keep flipping. Um, I think the different markets is the price points. You know, you're building these basic houses in Kansas City and Northwest Arkansas for double the price, double the profit. Um, and so I think that's a big draw to us.
Right. What are some current projects you're working on? Anything right now, whether it's a flip or something that you're excited about, something that's got you interested?
Yeah, yeah, we're doing. I think I called and told you this the other day. I bought two houses sight unseen um, a month ago that for the first time ever worked out for me to buy sight unseen. Um, so we bought a 3-1 that's going to be super easy to make into a 3-2. And then bought a 3-2. They're both right next door to each other. It's actually going to be a 4-2, or is a 4-2. Bought those for 100,000. Going to put another 100 in them, and they'll be well over $300,000 properties. So some great spread there. Um, I'm just excited about all the construction we're doing, man. I mean, stuff's rolling, stuff's moving. It's been a big pain doing all this. I mean, it's been hard. We've been working a lot. Um, we ate garbage on some of the houses, just figuring it out. So now we're finally. It feels like smooth roads.
I love that. I want to know your general thoughts on being in real estate, investing, doing this construction at 23 years old. Like, is it yeah, just tell me your thoughts on it. What are some of your favorite parts of just your day to day, just being in the industry? Like, how do you enjoy it?
Dude, I love it. I mean, I wake up every day excited to do this. Um, I think the main piece is connections. You know, you're on the phone with investors, bankers, the people I work with. I love them. Like I'm just on the phone or with people I love being with and talking to every day. Um, I love, I can work remote. I'm in my office a lot, but I love the ability to be able to work remote. And just the idea of like taking a house, buying it 50,000, putting 50 into it, and now it's worth 170. Just like creating equity, creating money, like, and you can constantly do it over and over again. It's just cool to me.
And you really get to build your network, right? I mean, it's your own company. It's, you're the one that started this all. So you get to choose, yeah, who are the lenders I'm working with? What title company? I'm building my team, with my hires and choices. So you're building that whole environment that you're around on a daily basis. So that aspect's cool. And I'm with it. You get to see the transformation on these houses and, I'm going to kind of ask you this here in a second, but you get to build a rental portfolio and properties that are going
Yep.
to cash flow, appreciate over time. It's really neat to be able to own real estate and to drive up to it and see it. So tell me about that side of things. Do you hold rental properties, and is that a big goal for you?
Yeah, yeah. So we do. I did quite a few burrs over the last couple of years. Slowed down since the rates hiked and cash flow's tougher. But we'll still keep really good ones. So yeah, building that portfolio, wanting to transition that into maybe starting to look at buying smaller multifamily and less houses. But it is a big piece of what we do. A big piece of that long term net worth. Like for me, my rentals are the cash flow stays in the rental account. We pay them off, and I'll think about them, keep maintaining. I'll think about them when I'm 45, and they're paid off.
Right, right. What does your current portfolio look like, and what are some goals? Like, do you have a cash flow amount that you'd like to get to in the future? Is it amount of units that you're wanting to get to, eventually, or are you just kind of picking them up when it makes sense and that'll accumulate how it will?
Yeah, yeah. So we're just over 30 units right now. A lot of single family, mostly single family. A couple duplexes sprinkled in, but mostly single family and a couple duplexes sprinkled in. I don't really have like a cash flow goal, quote unquote. I know when I buy a property, it needs the cash flow, 100 to 200 bucks a month, accounting for capital expenditures, property management, loans, vacancies, all that good stuff, which is tough right now. Um, that number was always over 100 by 30. I think we're going to smash that. I think we'll smash that before I'm 25, 26, to be honest with you. Um, so I guess I don't have like a clear cut goal for that. Just keep buying great properties and, focus more on the properties rather than that unit count.
Yeah, I'm with you. I had pretty set goals of units that I wanted to get to like year after year. I mean, honestly, it was kind of like doubling is what I wanted to do or close to it. But again, that was during the great times, the gold rush of COVID, where property values were going up like crazy. You could get loans for 4.5% on commercial. And yeah, maybe at that rate with those environment, you could.
Yeah.
But for me now, like with you, you've got to be flexible with the market. Where are interest rates, where's the supply and demand, and just adjust your strategy and your goals to an extent based off of that. So that's something I've learned big time. And it sounds like for you, yeah, you're picking up good deals and you're just kind of letting the chips fall where they may and not putting too much stock in, you know, having a super set thing every single year. And I know you said we're at 30 units, we're, doing this, to be clear, those are your units, right? I mean, those are your
Yeah, they're all mine.
yeah, yeah,
Yeah.
which is incredible. I think that's huge just to be able to be there and, to be able to launch from that place as you're growing.
Yeah, yeah. I like to say we're, man. I mean, it is mine. Well, now I have to have this is part of my brother on the construction side. But I couldn't do this without this team. Like I would still be wholesaling by myself without my team. Um, so it is a big team effort.
Oh, I love that. I love that. You mentioned coaching earlier, briefly. Could you go into that? Or you have a coach? Or you part of any sort of masterminds or anything that you help with the growth?
Yeah, yes. Business coaching is one of the biggest things that's probably propelled me to grow. So I've got two business coaches. Really, one I meet with both weekly. One's out of Charlotte. She runs a massive wholesale and new build operation there. And the one's just, I guess, like a general mindset coach, strategy coach. So I meet with both of those weekly, and just really, it's almost like business therapy. Like you just hash out what you're dealing with, and they give you a lot of tips and tricks on how to go through it. They don't tell you what to do, but you just work through it with them. And I'd recommend everyone to get business coaching. I mean, it's changed. In 2023, in February is when I got my first one, and I gave her so not that long ago, I mean, a year, I gave her my goals for the year, and she laughed at me. She's like, you should do at least double these. It had pretty good goals, I thought too. Like it wasn't, they weren't small goals. and we didn't quite hit them, man, but we almost hit my double goals. And I don't think we would have even gotten close without thinking that way. And then also it turned into this construction side, just really grew a lot. And then I am part of a mastermind as well, Collective Genius, a couple hundred investors, a lot of savages in there, weekly calls, great advice. I mean, it's a cool community. Everyone shares everything with everyone, which I don't think you get a lot in investor communities. Like people are sharing where they're getting their data from, who's marketing for them, what's working for them. So that's helped me a lot as well. I joined that in December.
Right. It's interesting because I've kind of watched you. You're not necessarily as involved with like a bunch of like the networking meetups and talking to all the local people and this and that. But at the same time, you are invested with other real estate people, with other business owners via the mastermind, and you got coaching. What's kind of your decision making on that? Like going that route of I'm going to pay to be in these groups to have this coaching versus just talking and meeting a bunch of people here locally.
Yeah, I don't know if it was a conscious decision rather than I started in COVID, so there were no meetups. Um, and then I really probably should get more involved with the local ones. I guess like this mastermind I'm in, I think the requirement's 30 or 40 deals a year, a certain amount of revenue. It's just like every time you're in that group, you go meet with these people once a quarter. Like everyone you talk to is a savage. Almost everyone I talk to is better at this than me. Like you just find yourself in those rooms where I feel like a lot of those local groups might not have that. They're free or 100, $200 a month. I think my time spent there is better.
Right, right. I'd like to get your thoughts on how important it is to be disciplined and structured in other areas of your life outside of business. How much emphasis do you put on your other disciplines and care in other areas, relationships and such, to succeed in business and find the most success you can with your company?
Yeah, big time. I mean, you've seen this transformation in me massively. So when I first started, I was over 300 pounds. Wasn't working out, eating like garbage. Wasn't reading. Had almost no disciplines other than working a lot. I was disciplined there, but I really, beginning of 2022, really started to focus on that. And I think that's another big reason my business propelled. I lost almost 100 pounds in 2022, going into 2023, consistently hitting the gym, reading daily. Involvement in church is another big part of that. I started going back to church, and I think that propelled me. And more energy, more self confidence. Um, gives you something to do other than work. Like you go clear your mind in other ways, just a healthier mindset in general. I think it's massive.
I love that. I think it's so important to have, be balanced in life, whether it's like you said, in business, in physical fitness and well-being, in your spiritual life, relationships. I think it is crucial because if we can go too heavy on one side, I feel like that leads to extremes and maybe some positives and growth, but also in the negatives of withdrawal from those other areas that are lacking. And so yeah, it's been cool to see that in you and having that emphasis for sure.
Yeah, and I think more importantly than that, like the friends that surround you to push you in that direction. You and a couple other buddies were really like, you almost had an intervention, sat me down and like talked to me about this. Like, hey man, like this stuff's important too. And I think that was that big push for that, is surrounding yourself with people who also do that. I don't think you can be disciplined in business, in fitness, in spirituality, in the way you eat if the people around you aren't disciplined in that as well.
Couldn't agree more. I've been saying that's the biggest lesson I learned, especially last year. I felt like it was just really sinking in of I'm the sum of the five people I spend my most time with. And it really transforms who you become. You can uh, really just try, to fight and push back against that if you're wanting to be different than those that you're around, but inevitably it's going to wear off and it's going to change you. So I think that is a huge thing you said there.
Yeah, 100%.
As we enter the last part here, I want to ask you a few questions that I ask each guest that comes on. So the first being, what is one of the best pieces of advice that you've been given?
Oh, so I thought about this, and there's a lot of pieces of advice that would go through my mind. I think the best was don't take advice from people you wouldn't trade places with, and that's not just business. That's personally, spiritually, fitness. Um, because coming into this, by starting buying houses at 20, 21, I know you felt the same thing of like, oh, real estate's too risky. Oh, you go to school, get a job. And just a lot of different pieces of advices in my life that I would get and take to heart that I think slowed my growth down. And then a mentor of mine just kind of laid that out for me one time. I was talking to him about it. I was wrestling with it. And yeah, don't take advice from people you wouldn't trade places with.
That's huge. Yeah, I couldn't agree more. I think that is something you have to look at when you're getting, everybody's going to give their advice. Everybody's going to give their thoughts in anything and through life. But you got to take a look at that person and evaluate, would I trade places with them? Is that somebody that I value their opinion on this subject?
Yeah, big time.
What's one of your favorite business books?
I'm sure everyone you've interviewed said Rich Dad Poor Dad, so I'm gonna veer away from that and go Richer, Wiser, Happier. I can't remember the author off the top of my head. I should have looked that up. But it's basically a book of a guy who interviews billionaires, 100 millionaires who have a career as full time investors, and he goes through their thought processes of why they pick the companies they do, why they invest the way they do, and there's a super common theme of like none of them chase the fads. All of them buy good deals that make sense. And they weren't billionaires and millionaires in the first 2 years, but they, over time, through good deals and not chasing fads and like a solid foundation of what they wanted to invest in, grew massive investment portfolios.
Hmm. I have not read that yet. That's definitely going to be on the list because that would be, yeah, very interesting to get those perspectives for sure.
It's a great book, great to keep you grounded. I would say a solid business model now, and I'll still get on TikTok or YouTube and see something new someone's doing, and I'll look into it. I'm like, is this better than what I'm doing? Even where I'm at. So I think that's just such a good book to read, such a good principle to live by.
Right, right. Okay. Then the third being, what is one character trait you notice that successful people commonly share?
Um, so work ethic, but coupled with calculated work ethic, like working towards the right things and being smart about their time. Because there's a lot of people out there that grind, but they're not grinding towards the right things, or they're not spending their time doing the right things, not leveraging technologies and people. So I think all hyper successful, super successful people grind at calculated things.
Hmm. I like that. Yeah, working hard, but hard towards the right
Yeah,
thing with the right focus. Yes, that's good. Well, fourth, then, as people listen, they want to connect with you, hear more about it, maybe buy some wholesale deals from you, however that might be. Where can they connect with you? What's the best way for them?
yeah. I'm on Instagram, Facebook, just at Luke Odell. Um, Lincoln has my phone number. You can reach out to Lincoln and give it to you.
There we go. Yeah, I'll just put it on the title of this podcast so everybody reaches out.
Yeah, and our website, highpointrei.com, or High Point REI on Facebook and Instagram as well.
Yeah, very nice. Very nice. Is there any question that you wish I would have asked that we didn't go over?
No, man, I think you covered it all. You killed it. I was amazed you fit me in for an hour.
Hey, good, good. I mean, it's pretty easy to interview you when you got this much going on. So it was a good time. Well, hey man, thanks for coming on. It's been good having you. Super excited for where you're headed and impressed, dude. It's been very neat to see the transformation. 3.5 years. It seems like it should be 7 years, but come a long
It
way.
feels like it's been 2 months. But yeah, man, I mean, I appreciate you having me. So yeah, thank you, man.
I'll have you back on some other time. We'll dive into some more deals, some more market stuff, I'm sure.
Yeah.
But yeah, good having you. So Thank you all for watching this episode of the Growth Circle podcast. If you enjoyed it and you got value from it like I did, please leave us a rating, review. I would love to hear from you on that, and we will catch you on the next one. See you.